Let's take a look at the bond market and the reaction that we're seeing there to the interest rate decision, because of course interest rate will have a direct impact on yields in the bond market. If you just look at the 3-month Treasury bill auction yesterday, we had a 300% oversubscription. As I said, yields are expected to go up on the back of this increase in the central bank lending rate. Do you expect demand for bonds to continue surging ahead like this?
Yes. I believe what's going to happen in the next coming days and weeks, actually, the bond market and other related government securities is actually going to, the demand for them is actually going to go up, because one, there's a lot of, there's a major exit from the equities because of a lot of factors: high inflation, then stable shilling, political uncertainty. So there's demand for more stable investment, and we're seeing that the local investors who still have an interest in making some money actually leaving the equity market into the bond market. Also seeing foreign funds and investors actually looking at it. And also given the decision by the central bank on interest and actually trying to handle the issue of liquidity between banks and the issue for local borrowing, is actually going to see the bond market as a more lucrative option in terms of what's going on, because one, the fundamentals are pretty stable, and it will be an easier way, whether it's short term or long term, in terms of investment.
Let's take a look at the banking sector. We had a mixed reaction from the banks yesterday. The likes of Standard Chartered up 0.5%, KCB down 0.25%, Equity Bank up 0.25%. So a mixed picture there. But going forward, how do you anticipate the more aggressive monetary policy stance to impact banking stocks?
Yesterday actually was an interesting day in the banking sector, because most of the top stocks are from the finance market, and we saw like Cooperative Bank, KCB, Equity, having relatively interesting results. And what's actually going to happen is, given what the central bank actually decided yesterday through the monetary policy committee on increasing the rate by 75 basis points, this is actually inadvertently going to affect the lending costs to the bank's customers. And also given the fact that if inflation and the supply chains actually not dealt with, we're going to see that at the end of the day, as much as business is going to be good, the bottom line, the business is going to be affected. Clients are going to actually hold back, which will affect the performance of the stocks on the stock market, because at the end of the day, people will be wondering, what's really going to go. And unless banks actually change strategy, and we're seeing a bank like Kenya Commercial Bank and Equity changing strategy to focus more on the regional market, and also having more inroads into the SME market in the country, because they're trying to look for more uncharted waters, more untapped markets.
And that, of course, is an untapped market. But of course, you say they need to look at new strategies to defend their earnings going forward as we enter this high interest rate environment. But they have posted pretty strong results for the first half of the year, but the stocks have been quite severely depressed. Going forward, how would you align yourself then in the banking sector? Any stocks that you would continue to hold on to given the uncertainty over earnings?
First, the banking sector stocks are the best at the moment. The good bargains, the entry level into the stock market in terms of the banking shares is actually impressive. Going forward, given how the business is going to be, the issue of foreign investors and foreign funds actually holding back to see what's the way forward, the issue of inflation, and actually key relevant fundamental factor is the central bank being able to deal with the issue of supply chains to be able to mitigate inflation. I'll be looking at Equity and KCB, principally because of the interest in the regional market, being able to stabilize the operations, being able to bring in more fresh capital to keep the relevant fundamentals going forward. A Cooperative Bank, NIC, they're still holding on to the local market, really not going forward with the regional market. So KCB and Equity would be my best option.
Let's move on to the agricultural sector. Some bullish activity on that front. Sasini rallying for a second day, up by 5.25%. Reeva Pingo also adding almost 5% on the day. On the one hand, you've got a weaker shilling, which is good for exports, but they have suffered, production has suffered as a result of the drought. Going forward, we have rains anticipated. But why do you see generally this bullish activity in the sector?
Actually, right now, the agricultural stocks should actually be doing well because the short trends are here. So, which means this will actually mitigate the issue of what's been happening in the drought aspect and the like. We've seen a company like Sassin actually diversifying its portfolio into other related services. And given the fact that for our economy, whose backbone is actually the agriculture sector, the government through the Ministry of Finance and Agriculture actually come up with other measures, measures to actually be able to help the relevant companies that are actually listed in the stock market to be able to handle the export business, and especially in terms of mitigating through irrigation, for example, for the flower farms and the tea stocks. So the bullish aspect should be going on for at least for the next few weeks as we see how long the short trend is actually going to last.
Let's look at the broader trend we're seeing in the market, because for once we've had a week of 4 days of gains, which is unusual for the Kenyan market, which has really been battered this year. Do you think this is a return of confidence, or is this just a minor uptrend that we're seeing?
There's an interesting way in how you look at the Kenyan stock market, because when you look at the 20-share index, the principal stock that actually defines its pendulum movement is Safaricom. And we've seen that Safaricom has been a very active stock the last 4 days. We've seen Safaricom, KCB, Equity, and Cooperative Bank being 4 major active stocks in the last 4 days, principally because of the fundamentals, principally because of the interest from foreigners. Many foreign funds are actually selling out of European and Western markets and actually coming to buying this.
That's an interesting trend, because that's not what we're seeing, across other markets like Nigeria.
True, and as long as there's an interest in this particular 4 active stocks, the stock market will actually keep going up. But we are due for correction. We are due for stability. 3,200 should be the psychological point barrier that should be broken, and then the market should correct itself and then start going up. And also given the fact that Kenya has been ranked the worst performing stock market in the region the last quarter, a lot of funds have been holding back to see what's the way forward, what's the government through the Ministry of Finance actually going to do to stabilize key macroeconomic factors. But as long as there's interest in Safaricom, which is a key component of the 20-share index in terms of measurement, the stock market should actually start going up at least by a few points.